Well, I'll tell you what, the long-awaited cut certainly happened, and the only question was, will it be 25 basis points or 50 basis points? But we knew we were going to get a cut. Obviously, it came out at 50 basis points. Everyone saw that, and at the risk of offending my lawyer friends, because you do have a juris doctorate, right? Powell certainly showed that he's a lawyer as well.
He did. He was talking a little bit out of both sides of his mouth there. He started his press conference basically saying, we're not behind the curve. We're doing this 50 basis point cut. We want to send a strong signal to the markets. But then later on in the press conference, somebody had asked him about some data that came out shortly after their July meeting, asking, if you had that data a little earlier, would you have cut? He's like, yeah, we were a little behind the curve on it. So they were both ahead of the curve and behind the curve, I guess. That's probably why they did the 50, is they wish they would have gone at the end of July, and they figure they can make up for lost time here.
Yeah, I always laugh about that because, after I do a show, there's the show I wish I would have done and the show I did. But, most importantly, that is Monday morning quarterbacking, and that's what we saw. That was that question. If you would have known that, what would have you done? But there's certainly some data points that we're going to have to watch.
There are. So now we really have to find out, is the Fed being preemptive, where they think, hey, we want to get in front of a weakening labor market, or are they being too reactive? And so with this mixed message from Powell, we are kind of sitting at the edge of our seat wondering, which direction is it going to head? We're going to be getting some data between now and the election, of course, now and their next meeting, because their next meeting is actually the Thursday after the Tuesday election. And so we'll get the labor market numbers. They have penciled in that by the end of this year, they expect the unemployment rate will go from 4.2%, which is what it is now, to 4.4%. So we have some time to see, they kind of drew this line in the sand. If the unemployment rate goes above that, they might make a bigger cut. But they also said that by the end of this year, they expect inflation will be 2.3%. Right now, we're running at, based on their measure, about 2.6. We would have to see some pretty tame inflation numbers between now and the end of the year to get to that 2.3% target.
All right, so let's talk about that and really unwrap this, because this is an important piece. Number one, inflation has cooled. Prices didn't come down.
Correct.
But the rate of change has cooled. So we do know that. But unemployment going from 3.4 to perhaps 4.4, that is a big move. And there's some famous economists and money managers who have suggested that perhaps we're even in a recession right now. We don't see a lot of evidence of that because of the GDP numbers.
That's correct. Yeah, the GDP numbers have been very strong. But when you peel that back and you look at some of the details, it highlights, I think, just how some of the economy has been in a recession, some of it has not been. It's just that it's not a synchronized downturn.
So let's talk about that. So it's, for example, manufacturing has been in a recessionary environment, and we've seen that because there's numbers that show that for a long period of time. So when we talk about, what's next, for example, you look at, for example, fundamentals and valuations, and that's what we're talking about.
Exactly. So from an investment perspective, we always look at what's the fundamentals that are relevant to the investments, and then how much are we paying for those fundamentals. So that's the valuation aspect to it. And we're thinking that in terms of those fundamentals, we are likely to see some economic slowing, but not stopping. And so that, we believe, should be pretty good for companies that have decent balance sheets. They have really a strong market position. But then you have to look for the valuations, because a lot of investors have been piling into certain parts of the market. And one of the problems with the herd mentality of the markets is they pile in, but then they can also stampede out.
Right, exactly. So we do know we have 50 basis points. We do know that we're going to get some more cuts, most likely in this year, 2024, and more in 2025. It's been said that is generally bullish for the market, but at the same time, we're seeing an unemployment rate go up. So there is these mixed signals. And so it's kind of a partly cloudy outlook, don't you think?
It is. That's the way that I would characterize it. It's not all sunshine, puppies, and rainbows, right? It is this more partly cloudy outlook because we don't know how quickly the labor market is going to cool. It went from too hot to handle to something much more tepid to a little bit actually less hot than what it was pre-COVID. When we look at things like the hires rate, so the percent of firms that are actually increasing their payrolls, that's at a very low level. But then you also see the layoff rate. That is very low as well. So it's not like they're firing people, and it's really a question of which one is going to accelerate first. Is it going to be the hires rate where people get a little bit more excited about the outlook, or is it going to be that layoffs/fires rate where people begin pulling back? And Deloitte did a survey of chief financial officers, and they found that only 12% of respondents thought that now was a good time to really take on risk with the business. Right. And so take on risk, that means in terms of, maybe invest in property, plant, and equipment, or expand your payrolls.
Right. And those two things are signs that there could be some apprehension. And that, of course, is because we don't know who's going to win the election. And there is a major difference between policies, especially on the tax side, which is the reason why we're going to do an event this coming Thursday called Dollars in Ballots, Navigating the Economic Landscape of the Presidential Race. That's going to happen this coming Thursday at 11 o'clock Central, noon Eastern. If you want to participate in that, and I know we're going to get a big number of folks who want to join us, go to annexwealth.com/events.